Hi, welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the flows week ended February 3rd, 2016, we saw fairly muted activity across our asset classes. We saw some interesting flows, though, in a couple of areas, and we'll point them out later. Let's start off at the top with our look at the macro group flows. Here we have perhaps the most interesting story of the week. Equity mutual funds returned to positive territory this week with $2.1 billion in net inflows. Taxable bond funds are getting better, that they still had about $500 million in outflows. Municipal bond funds still sitting in the driver's seat. They're taking in almost $600 million this week. And money market funds saw outflows of just $3.8 billion. Well, we've had a couple of good weeks in the markets now. Now, some of this on Friday is starting to evaporate. But for the past 2 weeks, we've seen returns of over 1% a week. This is a pretty good improvement over what we saw in January, and it, I think, encouraged some mutual fund investors to start dipping their toes back into back into equity mutual fund waters. Let's take a look at equity mutual funds for their flows detail. Overall, we saw domestic with $259 million in net inflows. That's quite a surprise, considering how long it's been since they've taken in some solid money. The non-domestic side still looks good. They took in about $1.8 billion. Overall, when we're looking at the league tables, international multi-cap large and multi-cap core and growth funds took in a combined $1 billion this week. So clearly investors are still looking to diversify their portfolios. Curiously, managed futures funds still looking good. They saw about $322 million in inflows for the week. Master limited partnerships also saw inflows, which I think is a surprise. They had about $189 million in inflows, as maybe some mutual fund investors are doing a little bottom fishing out there. And leading the outflow tables this week were flexible funds. They saw about $382 million in outflow. So overall, despite a good week in the markets, we didn't see a whole lot of activity. But again, it takes time for those wounds to heal. The next group to take a look at is equity ETFs. They had outflows this week of a pretty good $8.6 billion. Curiously, we saw some areas that almost look like a little bottom fishing going on. Now, the real outflows this week happened in healthcare, real estate, natural resources. Not a surprise there. Those have been soft areas for a while. But we did see commodities, precious metals, as well as utilities find their footing and accumulate some money this week from investors. So kind of a curious mix of inflow and outflow data. Overall, the big picture showed investors backtracking from SPDR, SPY, about $3.2 billion in outflows. The Russell 2000 IWM also had about $1 billion in outflows, and a few other areas looked pretty good. But overall, $8.6 billion in outflows for equity ETFs. Next group to take a look at is taxable bond funds. Again, they had outflows this week, $523 million. It's the 13th consecutive week of outflows. However, this is the lightest week of outflows yet. So we may start to find some positive inflows over the next couple of weeks for this group. Investors still do not like high yield. They withdrew a net $108 million this week. Loan funds, of course, still the whipping boy. $333 million in outflows. Core Plus funds, not so hot either. $216 million in outflows. The only bright spots this week, perhaps the brightest one, U.S. mortgage funds, where double line total return really owns that category. It had inflows about $594 million for the week. Core funds and short treasury also showed inflows. Well, the other side of this, the taxable bond ETFs group, they actually had inflows this week, $671 million. So investors with a little more maneuverability found something to like in the bond market this week. LQD was the worst off, though. They suffered outflows of $423 million this week. That was the worst out there. HYG and JNK, the leading areas for high yield ETFs, saw a combined $200 million in inflows, so we're starting to build a little interest in this spot. Overall, Treasury funds were the group leaders. They saw inflows this week as investors probably ran for cover a little bit on the fixed income side, but again, they found a few areas that they're trying out, and high yield is one of them. The next group to take a look at is municipal debt funds. Again, $585 million inflows this week. That came after pretty good performance, up about 48 basis points. It's been a while since they've had nice performance such as that. The 10-year Treasury by the end of this week was sitting at about 1.86%, so that definitely helped put some wind in the sails of the muni debt market. Overall, we saw investors continuing to buy high-yield muni, about $89 million in inflows this week. Intermediate muni was next with about $274 million. I should say they were the leader at $274 million. The Bond Buyer 40 index this week finished with a yield of about 4.05%, so that's probably why investors have found municipal debt funds so attractive. The yields look pretty good, and we really haven't seen a whole lot of bad news out of munis yet this year. The final group to take a look at is money market funds. Again, they suffered outflows of about $3.8 billion, fairly light activity overall. We saw retail investors add about $400 million, while institutions pulled about $4.2 billion. Broken down in other ways, tax-exempt money market funds had inflows of $364 million. Prime money market funds had inflows of $7.2 billion, and government and treasury funds saw outflows of $11.4 billion. That is, government and treasury money market funds had outflows of $11.4 billion. Well, that'll wrap it up for this week's flows activity. Feel free to join us online at lipperusfundflows.com and tune back here again next week as another analyst takes a look at the flows for the prior week. Thanks for watching.